It's 10:01. My name is Sally Preston and I'm a director with Moore Stephens. The session today is really just to talk you through the basics of JobKeeper. We've been getting an awful lot of questions on JobKeeper, but I wanted to take the time. We did ask you all in advance for any questions you might have. So I did want to take the time to run through your frequently asked questions. And that will sort of, I guess, bring out a lot of the detail that we have on JobKeeper. Now, people just saying they can hear. Fantastic. Thank you for that. I'm going to try and keep an eye on your group chat down the side. Please feel free to use that. And what I've got Kerry, one of our directors, who's going to keep an eye on any questions that come up or clarification. It's going to be a little bit of a distraction to me if I stop and look at all your comments. The video is being recorded, so what we'll be able to do afterwards is send this out to you. So the other thing that we're going to be doing for you today is after the session, we're going to send through an email which has got our frequently asked questions, and it's also got a bit of a cheat sheet on the JobKeeper, basically a one-pager on the requirements for JobKeeper. So rather than having to read, I guess, a long article on the ins and outs, we've sort of tried to cut it down into bullet points for you. There were a lot of questions asked in advance, and in fact about 70 different participants have asked questions, and sometimes there's up to 3 or 4 questions for each person. What I'm going to try to do over the next few days is respond to each of you individually. So if I don't cover off the content you need today, please keep an eye out also for your inbox, and I will respond to your question via email, and that way if you want to open further dialogue with me or your Moore Stephens advisor, you have the opportunity to do so. So keep an eye out. Now, the other thing that we're not going to talk about today, or I might briefly talk about it, is the changes to the Fair Work Act. The changes to the Fair Work Act were made in conjunction with the JobKeeper payment. What we want to do is run another webinar for you next week, and I've already spoken with a specialist employment lawyer. So she's going to come along and we're going to ask her your questions in another 1-hour session to do with employment law, because as accountants, we can't really advise you on employment law. We're here to advise you on tax and the JobKeeper payments and how they will interact with the ATO. So look out for that email as well. I know it might feel for some of you like we're spamming you at the moment, but we're just trying to keep you as informed as we can. So let's get into it. I think we've now got a few more people online. So what is a JobKeeper? You've probably heard a lot of press about it. The JobKeeper is a wage subsidy program designed to help employers keep employees employed, so that when this pandemic has finished, your business is ready to go back into full swing. So the government is giving it to you as a subsidy. What that means is that, and there were some questions about, will I have to pay it back? The answer is you directly, no. But as with anything the government does and hands out money, the taxpayers collectively will at some stage have to pay off this debt that we're going to accrue from all of these grants and subsidies that are being offered. So your business will not be paying it back. So if you are eligible, and we'll talk a little bit about that, don't stress that you're accruing a debt that's going to become insurmountable. That is not the case, or not with this one anyway. Okay, the key elements of the JobKeeper program. There are basically 3 things you need to remember. One is you need to figure out if you're an eligible entity. The second one is, do you have eligible people? And the third one is have you made eligible payments and done the right paperwork? So they're the 3 key elements, and if we break it down into that level, it's going to make the detail feel a little bit easier to handle. So the first element is an eligible entity. So first of all, you need to be Australian business, or if you're a not-for-profit, basically carrying on your activities in Australia. You need to be carrying on a business. That is something that I think has been a little missed. And that is an interpretation. So one of the frequently asked questions is about what's carrying on a business. That's not an easy question for some people that are operating an accounting firm or a law firm or a hair salon. It's quite obvious they're operating a business. For people that are undertaking more passive activities, that's going to be a bigger question to answer, and it's not something that we can go into detail on today. So first and foremost, is the entity carrying on a business? And is it doing so in Australia? Then we need to look at the turnover. So the turnover rules you've heard about, and a lot of people asked about the 30%. So what we have is two measures of turnover now that the rules are through. One measure tells us how much drop in turnover we need. So for that one, we look at aggregated turnover. Now, aggregated turnover is a tax concept, and what that means is all of your affiliates and connected entities, we add their turnovers together. So if you're a large group of related parties, we might be adding together all of your income to determine whether you collectively fall under $1 billion or over $1 billion. Now, for many of you, it's a no-brainer. They could add half the town together and you're probably not over $1 billion. But if you're a multinational, you do need to look at the parent company and people and your related businesses in other jurisdictions and look at how those rules apply, and then consider. Now, that doesn't mean you're not eligible. Every business that has the right percentage drop in turnover that meets the eligibility criteria, regardless of size and regardless of the number of employees, is eligible to try and qualify for this. So because you're big doesn't mean you get knocked out. So under $1 billion, you're looking for a 30% drop. Now, that's how we measure, are you a 30%? If you're over $1 billion, you're 50%. And if you're a not-for-profit, we're now looking at 15%, which is a great result for the charities registered with the ACNC. A not-for-profit or some other party that's not registered as a charity with the ACNC is looking for the 30% or 50%. Okay, so when we look at what then needs to drop, it's a different definition of turnover. And what we do is we take away all the related parties. Even if you're a tax consolidated group, we don't look at all the entities in the consolidated group to see if they've all dropped in turnover. We're going to look at you, at that one entity, to see whether it's dropped. And then we'll talk about the 30% more than the other percentages being the majority. So has your business or your entity dropped? And the measure of turnover for this one is your GST turnover. So it's a different definition again. And you'll be able to tell that by looking at what you report on your BAS. Okay, so that's essentially what we're looking for. And what we're going to do is compare that turnover. So, for example, in March or in April, we're going to compare it to April last year. There's some ability for the Commissioner of Taxation to put other rules in place if that doesn't sort of fit given the circumstances of your business and what it's been going through. But basically we're trying to compare apples and apples, saying March to March, June to June. You can do that on a quarter basis if you like. You might do the June quarter BAS to the June quarter last year. There's some other things that they've given guidance on around if you're a newly started up business and you didn't exist last June. They've given an example in their rules, an explanation to their rules, saying that, for example, they might take an average of the turnovers up until that point and then say, have you dropped more than 30% below your average? So they've got some ability there to put other rules in place. We are still waiting on the ATO to clarify, because they're given the power to make alternate rules. We haven't seen anything from them yet on what they might look like. And I hit refresh on that ATO website quite regularly. It's not there today just yet. It may be there by the end of the day, fingers crossed. So we've got some more guidance for you next week. So we're looking for our 30% drop or 50 or 15, depending on the entity. You also can't be an excluded entity. Now, pretty much unless you're a government body or you're a bank and get the bank subject to the big bank levy, or you're already in liquidation or bankruptcy proceedings, they're the main exclusions for an entity. So for by and large, the majority of entities will be looking at the 30% drop for an Australian carrying on business, if we stick with those ones. So that's our entity eligibility. If you can hit tick on those, now you'll measure that turnover regularly. If you haven't hit it yet, and it's also based on projected. So you might be looking at April's results and we're halfway through the month and go, oh, it's been a bit lousy. I reckon I might get there. Well, what you'll do is when you do believe you're going to drop that amount, you'll go and register. And then you'll continue on and monitor it, but you'll also continue on as if you are going to be in the JobKeeper payment because you've ticked your eligibility requirements. At this stage, when it's fresh, you've got the luxury of waiting till the end of the month to do that. And we'll talk a bit more about the administration and things to do at the very end. But when we're into June and July and things like that, you might get to the first week of July and you're not in the JobKeeper and you then go, wow, this is a really bad month. I've had no pre-orders. I've got no customers. Well, there's been another government directive and now I've now had to completely shut my doors. I know I'm going to drop 30%, and you'll register at that point. Now, provided you register in what they call a JobKeeper fortnight and pay your employees as if they're eligible to the JobKeeper, the ATO will pay you or reimburse you for that fortnight. So if you don't decide until the second fortnight in June that June's a terrible month, you've got to remember that you haven't met the requirements the first fortnight because you didn't pay. Now, you didn't tell the ATO or register, and you didn't meet the requirements. So therefore, it's only the second fortnight you'll get the JobKeeper for. We find that's a bit of a hole. And at the moment, no one's focused on it because we're not there yet. We've got this whole month to sort it out. But after this month, it's going to be a bit trickier come May, and we're hoping that that might be something they change because we find that quite onerous and unrealistic that you miss out on a whole month when you've only just realised and you've missed a JobKeeper fortnight and therefore you don't get the payment for it. So stay tuned on that one, but that is for the next few months anyway. At the moment, we're still getting into this program. So that's our eligible entity. You then need to have eligible people. So what they look like is, did you employ people on the 1st of March 2020? Anybody who is employed and meets the requirements is going to be eligible for the JobKeeper. Now, the requirements aren't that clean cut, particularly if you've got casuals. So if you had any employee on 1 March that was full-time or part-time, they're good unless they fall into an excluded category. I'll talk about those very briefly, but that's mainly if they're on certain government payments, so workers' compensation and things like that. But if they're in your business, they're working, they're full-time, part-time, they're the easy ones. They could have just started on the 28th, 27th of February. They're there 1 March, they're eligible. There is a hard and fast cut-off date of 1 March. You've then got your casuals. The rule is you need to be what they call a long-term casual, which is somebody that was employed for 12 months on a sort of continuous basis. And that's a little bit loose, and the term that they use, and we haven't seen a lot of interpret. I'm just having a look right now of the actual term. It's escaped me. Regular and systematic basis is what we're looking for that long-term casual. So, for example, if you have someone that comes in every week for a Saturday shift, that's probably called regular and systematic. Okay, they come in. If you have someone that comes in maybe once a month if you call them, we haven't seen the ATO guidance on whether those type of casuals are going to qualify. But so long as they're on your books, now you may have since, or they may have been stood down already, or you may have since stood them down. Now, if they're stood down, they're still employed, so they still qualify. However, if you made someone redundant on the 25th of February and they were no longer therefore employed, they're going to fall outside the net, okay? If they were made redundant on the 2nd of March, they were employed at the 1st of March. You now have the opportunity to go and rehire them and have them eligible for JobKeeper. So what the government's done is had a look at, we want these people to keep their jobs. We understand you had to take action because the lack of income coming in. We really need people employed. We really need you guys as business owners to be ready to go when it's time to go again. So there is a hard and fast date. Now, the payments don't start until the 30th of March. So there are two key dates in March to remember. One is the eligibility date and the other is when the payments start from date. Okay? Okay, so an eligible person are those people who are 16 years old on the 1st of March. So, or older. So if you have a 15-year-old casual, they're not going to be qualified for it. Even if they're a long-term casual, they've been there 12 months, they're just not going to qualify because of the age requirement they've put in there. Then you've got, they basically have to be an Australian citizen. They're people on certain visas that are okay, but basically we're looking for Australian residents for tax purposes, and New Zealanders on a special visa. But these are the questions you're going to need to find out or confirm with your employees. Some of the information we expect that you've already got. Okay, so were they an eligible person? Then there's, I'll talk about eligible business participant in a sec, but let me talk about for that employee to be eligible each fortnight, there's also some subsequent tests, and that is whether they're still employed. So if someone resigns or you actually turn around and someone is made redundant or ceases employment with you across the course of the JobKeeper payment, you won't be eligible for that person once they no longer work for you, okay? So that's a pretty clear one. But they also can't be excluded in that fortnight. So they'd be excluded in that fortnight if they had a job with somebody else that they were getting the JobKeeper from. You can only get the JobKeeper once per person. There is no getting around that. Once per person. The other ways that an employee might be excluded is if all of a sudden they're paid government parenting payment or dad or partner pay, or they went off work completely on workers' comp. So they're the exclusions. So if you've got people, and they can still go on paid parenting leave and things like that, but if they're already on a paid government subsidy or some sort of pay through those schemes, you can't get JobKeeper for them as well. That's different if you've put them on things like a paid maternity leave, annual leave, long service, if you're funding that. The JobKeeper can go towards funding those things. If they're on a government payment otherwise, they won't be eligible for JobKeeper. Okay, so that's one category of eligible people. Now, the big one that we're getting a lot of questions on is owner-operated businesses. What happens with them? So you may be a sole trader, you may be a partner in partnership, you may be a shareholder or director of a company, or you may be a beneficiary of a trust. If any of those structures runs your business, so you might run it in your own name. So say I might have a beautician salon that I travel around and I don't have a structure behind it, it's just me. I'm called a sole trader. I will be eligible provided I meet the criteria, even though I have never reported salary and wages for myself. Okay, if I'm a sole trader and I've got employees, I'm still eligible for those employees if they're otherwise eligible and we go through that list. But for me personally, I don't get salary and wages, so I'm not actually an employee. So I can still get it if I, what they call it, we're calling them an active business participant, and I have my own set of criteria. I can still get a JobKeeper payment for me. Okay, one person who's not salary and wages can meet this criteria per entity, okay? So if you run a partnership, your business in partnership, and you are all personally the partners, one person gets nominated. So there's a little bit of tax planning that needs to go around that if you're in those situations. If you run your business through a trust, one adult beneficiary of the trust, okay, is eligible. If you don't have an adult beneficiary of the trust, who's actively participating in the business and who meets the other requirements, you may not get this payment for them. Okay, there is a little bit of a hole in these more complex structures. We're all waving our arms around about we think that these are the people that are left behind from this system. And so we can only hope that at some stage along the way, we get some better guidance on this. But these are the rules today. And if you're a company, now, a lot of companies, if we were structuring them, you might not be the personal shareholder. We would often put family trust underneath it to run it, and then beneficiaries of the trust. Now, if you've got that double layer structure, your business is run through a company and the shareholder is a trust. That trust isn't carrying on a business if all it does is hold shares. So it can't qualify for JobKeeper on its own. Your company, the shareholder's not an individual, so it can't qualify through being a shareholder. The only way a company's going to get it is if there's an individual who is a director who's also meeting the requirements being an active business participant. Okay? So these multi-layer structures have been left out in the cold a little bit with these JobKeeper rules. Okay, so that's an eligible business participant, and you do have to nominate someone who's actively participating. I have no idea how they're going to measure that. We haven't seen any paperwork from the ATO on how they're going to nominate that person, let alone how you're going to explain that they're an active business participant and what they do to prove that they're actually actively involved. But they're the requirements they've set out today. Now, we've covered eligible entity, eligible people, which is our employees and an active business, an eligible business participant. And then we've got eligible payments. Okay, so $1,500 is your golden rule, no matter what your person gets paid otherwise. Each person must get paid from you. I'll put the eligible business participants to one side. Must get paid from you $1,500 a fortnight. You pay it up front, the ATO reimburses it once they see that you've paid it. So let's give an example of a part-time staff member who works for you 1 day a week. They might earn $250 a week or $500 a fortnight. You are now paying them $1,500 if they're eligible a fortnight. They just got themselves a pay rise. Lucky them. Okay. If they're still working in your business, their $250 a week or $500 a fortnight is your normal salary and wages with superannuation on it. Okay. Pay as you go withholding applies the whole amount, so your whole $1,500. And the rest of the payment you get that relates to JobKeeper is up to you whether you pay that super on there, okay? But they will get the $1,500, and if they're working, their normal wages have normal super, and the rest is almost a bonus. Now, if they get paid $3,000 a week or $3,000 a fortnight, you keep paying them their $3,000. If they're still working in your business and all the hours are still there and everything's still in place, your $1,500 that you get back, you're already paying it because they're getting at least $1,500 in salary and wages. So you keep the $1,500 as a contribution towards what you're already paying them, okay? So the only reason they're effectively getting a pay rise because of JobKeeper is if they don't get paid the $1,500 ordinarily, okay? So the payment must be made each fortnight. Well, in the frequently asked questions, I'll go through if you pay monthly or you pay a slightly different cycle. But basically by month end, they need to have been paid, and the ATO will then reimburse you at about the 14th of the month. You need to report by the 7th of the month after. So in June, you'll report by the 7th of June. You'll give them the report they need each month, and they'll have the money by the 14th is what they're saying. Time will tell, because I'm not sure their systems are up to date for this yet. Okay, so that's basically the three key things: eligible employer or eligible entity, eligible people, and eligible payments are being made. Okay, let me run you through the frequently asked questions that we've kind of already, that I've already got. Okay, I'm going to break this down into one that we've been asked, eligibility query. One is, my entity receives passive income. So basically, I'm solely a landlord. I own a commercial building, and that's what that entity does. Now, someone might be getting paid salary and wages out of that. They might not. Or you're looking to try and nominate them as a business participant. All right, they're shareholder of that company or whatever entity it is. Now, that comes back to the core question at the very start is that business considered, is that entity considered carrying on a business for tax purposes? The Treasury frequently asked questions give an example of a landlord, and basically it says where the activities of the entity are largely passive, no, not eligible. Okay. Now, there's different size and scale and considerations, and if you have a large land holding and actively undertaking a business, then that's a different question, and we won't address that today. That's a whole different beast to attack. Okay, we are a not-for-profit organisation. Are we eligible? Well, yes, if you are a not-for-profit, you are and carrying on your activities in Australia, yes. Basically, whatever turnover you drop applies to you, depends if you're an ACNC registered charity or if you're not. So you're either at the 30%, maybe I probably doubt the 50%, but potentially, or 15% if you're an ACNC registered charity. Okay. The main question we're getting is about turnover. And we were left a bit sketchy until last week when the law came out and the rules came out and then the guidance. And we're still scratching our heads because what they've done is they've put into these rules, and we call them rules because the law that got passed was basically a law that said Treasury can make the rules. Treasury's given us their rules, but that was designed so Treasury can be agile and change those rules without having to have Parliament resit and approve them. It doesn't happen, if ever. So that's where we're sitting, which is why I refer to them as rules. How is a drop in turnover measured? It's the projected GST turnover. So you look at your month in ahead. If you've had a bad month, but it wasn't quite at your 30%, and you think, I know the next month's going to be at 30%, go ahead and register. Okay? So you compare that to the same month the year before in most cases. But they've given us two rules around that. One is that there's an alternate if that doesn't work. The Commissioner can give a legislative instrument which says other rules can apply to you. And there's certain circumstances they've given those in. So what's included in the GST turnover? It's sort of like it's what you put on your badge. So what's it's all taxable supplies and GST supplies, but it doesn't include input tax supplies, supplies for nil consideration, supplies not connected with an enterprise the entity carries on, supplies not connected with Australia, any transfer of capital assets, which can obviously shoot your turnover up or down. They're not included. And then also if you're winding down an entity and you've got supplies to do with that. So there's a few rules around there. Now for registered charities, donations are something that you need to look at. So in general, most donations will be included. So if you all of a sudden get a large benefactor come in, give you a large amount of money, that might mean that you're not eligible for that JobKeeper. So that's worth having a lot more look at, what those rules actually say. Okay, once turnover has dropped, do I need to continually monitor it? No, no. You get in once, so say you're eligible in April, first up. You might then turn your business around come July. You don't lose JobKeeper. Once you're in till the end, okay? So you can measure it month against month, quarter against quarter, but once you're eligible, you're in, okay? You will be reporting every month, but they tell us that so they can measure the economic impact of coronavirus. It's not to retest you every month. What periods can you test? So the months ending 31 March, 30 April, so March, April, May, June, July, August, September, compared to the same month last year, or quarters starting 1 April or starting 1 July compared to that one last year. The next question we've got is, my BAS is lodged quarterly. Can I use months to compare my turnover? We originally thought you potentially couldn't. The answer, though, is yes, you can. The ATO has now come out and said how you choose to reject your fall in turnover is not dependent on whether you report quarterly or monthly BAS, though you can use that to make it easier. I would have thought that month to month is probably an easier comparison to be able to fall within these rules. What happens if it's a new business and there's no comparative period? Also, what happens if there has been a structuring since last year? So acquisition, sale. So there's an alternate decline in turnover test that applies if there's not a relevant comparison period. So that might be the case for new businesses. It might be the case where you've got big variances in your income. So we do need to look at those businesses that aren't necessarily going to fall in because of certain factors, and potentially wait for the Commissioner's notice on how we go about asking for his permission to use an alternate period, okay, or a different set of rules. So we still don't know how we apply that, or how the Commissioner, whether we can just apply, whether he's going to give us the rules for certain circumstances. So we'll keep you posted if you don't fit into the standard 30% drop compared to last year compared to the month last year. What happens if I estimate that my business turnover is projected to decrease by 30% for the month and I get the results wrong? Okay, the Treasury fact sheet says the Tax Commission will also have discretion to set out alternative tests to establish eligibility in specific circumstances, which is what we just talked about. So the example that gives is eligibility may be established as soon as a business ceases or significantly curtails its operations. So if you shut your doors, they're not necessarily going to make you wait for the month by the sounds of it to then say my turnover's dropped 30%. We're hoping that means they can go ahead and register straight away. There will be some tolerance where employers, in good faith, estimate a greater than 30% fall in turnover, but actually experience a slightly smaller fall. We don't know what a slightly smaller fall means yet. Does that mean if you get to 28%, you'll be okay? Does that mean if you get to 29.5 or is it 25%? We don't know. So we'll clarify that when we get more from the ATO on that. We do not meet the turnover requirement for the month of April. Does that mean we miss out? No. You can come in at any stage that you now qualify. You will then get it for the remaining period right through to that September. If you operate two businesses in one structure, then you will need, so in one entity, so say a company runs two businesses. You're going to need, because we're looking at GST turnover, if you've got one ABN, it's the turnover, or one GST registration, it's the turnover that goes within that to fall in that 30%. Okay? That was a question we had from the online queries. Does the turnover have to reduce or prove to be reduced because of COVID-19? No. No. So if you've had a reduction in turnover just because, compared to last year, there is nothing that says you have to substantiate it is because of the coronavirus. Okay. I'll skip through. I've got some employment queries, common questions we've been asked. Okay. I've already stood staff down, but I really want them to come back to work for me. What do I need to do? Well, assuming they were still on your books at 1 March, and stood down generally means they're still employees, you can just communicate with them that you're applying for JobKeeper, and they will have to give you permission that they will give you the form that says I'd like to be included. And you can then give them their $1,500 even though they're not working. Okay? If you'd made them redundant already, so long as they, as I said earlier, as long as they were employed at 1 March, you can go and rehire them. And the intention is that if you want them back, you will rehire them, and they'll be eligible for JobKeeper. JobKeeper is actually worth generally more than JobSeeker, and because JobKeeper doesn't have any means or income testing, it's potentially going to be a lot better for your employees if you want them to remain with you, that they go on JobKeeper rather than JobSeeker. Do they have to come back to work once you get JobKeeper for them? No. Some businesses shut. There's no obligation for them to come back to work. Whether you negotiate with them to do other work is an employment law question. We're going to cover that next webinar next week, okay? I'll skip that one for now. Can I choose which employees receive the payment? No. Every eligible employee, it's a one in, all in. Every eligible employee will get the $1,500. So if they're still your employee, they tick all the boxes, they fill in the forms, you can't exclude employees. The only way that you would exclude them is if they were no longer your employees. Can I claim both JobKeeper and the apprentice/trainee subsidy at the same time? So if you've already applied for the apprentice trainee subsidy, which is the Supporting Apprentices and Trainees scheme, you can get that up until the 30th of March and then go into JobKeeper, okay? You have to then not get that payment anymore. You might choose to not get JobKeeper for that person and keep that scheme, but in general, they're expecting people will change over to JobKeeper if you're eligible. So there's no double dipping on that one. I received the cash flow boost. Can I get JobKeeper as well? Yes, you can. And in fact, they've now confirmed in the rules that we do have normal pay-as-you-go withholding on JobKeeper, which means that's actually going to increase your cash flow boost. So you pay-as-you-go withholding boost. Looking at how the rules, they're calling it salary and wages with pay-as-you-go withholding. Your pay-as-you-go withholding goes in your BAS. That's what they're going to measure your cash flow boost against. So that is a little bit of a double dip. Now, if you've only just purchased your business from someone else, so say you bought a cafe or a bar 6 months ago and you kept on all the employees, took them into your entity, and half them are casual. They don't meet the test of long-term casuals for just you, but they've given us some rules that says if they were long-term casuals of the same business, so you've bought the bar, you had casuals on board, and if they had been employed continuously by you that whole time they've been employed, would they have satisfied it? Then you can get paid for them. So a change of business owner isn't going to change the ability for the long-term casual to access it. They're still working for the same business, even though the owner has changed. Okay, let's talk about how these payments work. 1,500 is your golden number per fortnight. If your part-time staff only earn 900, I mentioned it earlier, they will continue to get the hours they work being paid, but you'll have to top them up so they get in total the 1,500. So say an employee was getting 900 a fortnight, they would get the 900 with super on the 900, and then they'd get the extra amount with pay-as-you-go withholding still on it, but no, not necessarily super unless you choose to pay super on it, okay, for the extra bit. So yes, part-timers and casuals potentially are going to get a pay rise under this scheme. Now, I mentioned the $3,000 one earlier. That one's pretty easy. They just keep getting paid and you get the $1,500 to help compensate you for keeping them employed. When does payment start? Now, I mentioned there's 2 dates in March. 1st of March, eligibility test date. 30th of March, payment start date. So we run our fortnight from the 30th of March for 2 weeks. That's the first JobKeeper fortnight. And then we keep rolling fortnights until the JobKeeper scheme finishes 6 months' time. Your first payment you expect to get, registrations are going to open for this scheme on Monday, okay? There's no mad hurry on Monday to do it. You've got sort of the next week until if you're planning on getting JobKeeper for the month of April, you'll need to get on within sort of a week or by the end of the month. I think it's the 26th, but we'll see what they say when they put it out, what the deadline is to get the first 2 payments. So you've got about a week to apply. What you need to do in the meantime is, we'll talk about the communication with employees as well, but you need to have been paying JobKeeper and you need to have caught up the whole month, the whole 2 fortnights that's going to come through in May. You need to have caught that up by the end of the month. They've given us a transitional period because the ATO is madly scrambling to release information to us off the back of Treasury, getting their systems in place. They're giving us a bit more leeway for this month to catch up payments to employers. So if you have a bunch of casuals and part-times who are getting effectively a pay rise, you will have the chance to catch them up. You won't have that every month, okay? But you've got it for this month, so don't panic if you haven't paid it yet. Breathe, we'll register, we'll communicate with employees, we'll fix it all up, and you've got till the end of this month. And I know that's coming up fast, but we've still got time, okay? So if you did not pay your employee by the 13th of April for that first JobKeeper fortnight, don't panic, you're not missing out on it this month, okay? You've still got chance. Now, if you have an ATO debt, that's another question we've been asked. Are they going to use the JobKeeper to offset it? By and large, no, okay? This money is designed to go into your employees' hands. So your debt is a different matter from the JobKeeper payments. If your employee's on annual leave, do they get JobKeeper payment on top of their annual leave? Well, really, no, they're getting paid their annual leave. If they get paid normally less than $1,500, yes, they'll get a top up to $1,500. But if they're already getting $1,500 for their annual leave or more, same thing. Same as if they were still employed when they're on annual leave. Self-employed questions, which a lot of you probably have. So we talked about if you're a business owner, you haven't paid yourself salary and wages. We've got the chance to nominate one person per structure that's not on salary and wages, who's actively involved in the business, to be nominated for JobKeeper. That payment's going to work a bit differently. The ATO has indicated that what's going to happen is you don't have to pay that to the individual. That's going to go into the entity. So if you're a director of the company who's actively working in the business and meets the criteria, the $1,500 is going to come each fortnight into the company. You don't have to pass it back through, okay? If you do, we'll talk to you about the way we can account for that, but it's not the same rules as for an employee, okay? Slightly different rules there. if my business is not registered with a GST, okay, so what are the requirements for this to be an eligible business participant? So the owner-operator of a business not paid salary and wages is that you must have had an ABN on the 12th of March, I think it is. And then you must have done one of two things. You must have lodged a BAS with a supply, being a taxable supplier, GST supplier, or an input tax supplier in it, since 1st of July 2018. Okay, the ATO needs to have noticed that you've had business income. Or your 2019 tax return, noting some of them aren't lodged yet, but your 2019 tax return reports business income. Okay, accessible business income. Now, if you haven't lodged your tax return, there's a bit of a caveat there that says the tax return that was lodged by the 12th of March, or the BAS that was lodged by the 12th of March. Now, the BAS is a bit easier because they're more periodic, or a further time as allowed by the Commissioner. So we're kind of running on the assumption that the ATO is going to confirm that if your 2019 tax return wasn't lodged by the 12th of March, you've got until that was due to then prove your business income in those circumstances. So I did forget to tell you that there were those criteria for the entity if you're going to try and claim that director, shareholder, beneficiary, 1,500 a fortnight. Okay, there's a couple of extra criteria the entity or the business has to satisfy. This will come through in the little fact sheet we send at the end. So I know it's a lot. Hang with me. So what that means is people are panicked because if they don't lodge BASs, if they're not registered for GST, say you only have a turnover of $50,000 a year because your business is quite on the smaller side, you're a sole trader, you make $50,000 a year, you're not registered for GST. So you're not lodging those BASs. So the main thing is you would have an ABN anyway, as long as you have one by the 12th of March. Then you satisfy the other rules and hopefully your tax return's been reporting business income, or it's going to report business income for the 2019 year, okay? So there's still other workarounds just because you're not lodging BASs with GST in them, okay, to prove that you've had that drop in income and that sort of stuff. So there's a few more rules to get that payment for the owner-operator, and we can spend some time with you working through those for your case. Okay, administration queries. How do you participate and when must the election be made by? You must elect to be in for JobKeeper. It's not a default. You don't have to apply for it. You choose, and then what you need to do is they're opening the applications by the 20th of April. The ATO is expecting, and they've put a form available that we might attach in our email that comes out to you afterwards. That form goes to your employees. You'll fill in the top section, which has got your name of the entity and a few details on the business. Then your employees need to go through because they need to assure you they're eligible. They need to tell you that they're not getting it from somebody else. They need to tell you that they're going to satisfy that they're Australian resident, that they satisfy their rules, okay? That gives you a little bit of security to know that if I claim JobKeeper for them, I'm not going to get in trouble because they went and claimed it from somebody else as well. Okay, so you keep that form for your records and you use those forms to determine how many eligible employees you have. Okay, then you go and you notify the ATO, these are my eligible employees. They'll use single touch payroll, and if you're not on single touch payroll, they'll use another means to make sure you paid them the $1,500 already, and then they'll look to reimburse you. The admin on this is a little bit sketchy still because the ATO is just madly trying to catch up. So the ATO will pay it to the employer unless you're a sole trader, in which case they'll put it into your bank account for you. So they will pay it into the employer's bank account. You will be nominating the bank account on the form that you want the money to go into, okay? There are ongoing reporting requirements. By the 7th after every month, 7th day after every month, you'll be reporting your actual GST turnover for the month and you're projected for the next month. As I said, once you've qualified, that's not a retest. They're saying that that's for their information. And you'll also report your employees because every fortnight you'll be required to make sure those employees are still eligible and haven't fallen in one of those excluded categories. Can an employee not come into JobKeeper? Yeah, they can say no. I don't know why they would, but they may say no. They may not say no from you because they may have 2 jobs. I will talk about employees, and let me just check my time. I will talk about employees for a couple of minutes quickly. Some of the questions I've had working with businesses, and what we have been doing is speaking to employees on behalf of our clients and explaining to employees how it works and doing a bit of a webinar. So if you're interested in getting some assistance with communicating, please let us know. I work 2 part-time jobs. So I'm an employee, I work 2 part-time jobs. I've been stood down from one, so the bar shut its doors. I cannot work at the bar anymore, but I'm still working at the cafe that can do takeaway service, okay? How does JobKeeper work for me? The ATO said that you'll nominate a primary employer. Now, it hasn't said how you determine that. I'm going to say today that maybe it's the employer that stood you down. Hopefully, fingers crossed, when they come out, that's fine. But you're nominating that bar that you can't get money from anymore because there's no work can be your primary employer, and you can go claim JobKeeper through them. If that cafe that you're still being employed from, still getting income from, and that's fine, if that shuts, you can't then go get it from them too, okay, as an employee. Changes if one of those jobs you're a casual in. So if you're part-time or full-time, or what they're calling permanent employee at one, and casual, long-term casual that should qualify in the other. If you're a casual employee, you cannot get and a permanent, you cannot get it from your casual employer. You have to go and get it from your permanent employer if you're going to get JobKeeper. There's no threshold on the amount you need to work from each one, which I found surprising. I'll give you an example. A gym. So a gym's now shut. A lot of gym instructors have full-time jobs or part-time jobs elsewhere. Most gym instructors could be casual. They come in every week, they're systematic, they've been there for years, they come in and teach their classes, they go home, they might do up to 10 hours a week. They've now shut. Now, their part-time job might only be 10 hours a week somewhere else, but they can't go and get JobKeeper from that casual job. So the fact that there's no threshold bothers me a bit in those circumstances, bothers me a lot, but the rules don't give a threshold. They just say if you've got a permanent job elsewhere, you cannot get it from your casual employer. I think I've covered a lot of those. I've been stood down, can I take on a second job? There's an employment law question there. They should be talking to the employer that they've currently got. They can be on JobKeeper from you as the employer, and if you give them permission to, they can go and get a second job. Okay, they cannot then get it from that second employer, but there's nothing stopping them from going to work elsewhere if you say that's okay. And we'll talk a bit more about that next week with our employment lawyer friend and go through the employment law aspects of that. So if you had been made redundant, if you made staff redundant, they're now eligible. You found out about JobKeeper, you made them redundant on the 15th of March, so they were employed by you at the 1st of March. They otherwise qualify for JobKeeper. You'd like to bring them back off redundancy, or you'd like to rehire them and make them eligible for JobKeeper. They're on Centrelink. They've gone and got Centrelink. They needed it. They now need to tell Centrelink that they've got this second source of income coming in from the 30th of March. Now, Centrelink is going to probably take away their job seeker payment because they won't meet the income tests. Interestingly, though, if they got the $750 economic support payment from Centrelink, they get to keep that, okay? So that's in their bank. That's not going to be back paid. If they don't tell Centrelink and they're on JobSeeker that they're on JobKeeper, they will end up with a debt with Centrelink because it's income that they haven't declared. It will be income for the purposes of this financial year and the next financial year, these JobKeeper payments. So that's what I've sort of got by and large in frequently asked questions. Now, I just need to figure out, what I'm going to do is allow Kerry to unmute herself and see if there's any other questions. So, Kerry, you can now unmute yourself. Hoping you're there.
Hi, Sally, I'm here.
Hi.
Good morning, everybody. I do have a few questions. We've got quite a few, so I've tried to exclude the questions you've already covered. However, we will get back to everybody to let them know an answer to their questions. So I'll start. Some of these may be workplace questions that we'll put on hold.
Okay. Yep.
We've got here, I have several casual employees who have been on my books for 3 years, but who have not yet received any pay for the last 6 months. Are they eligible?
Good one. I've actually been asked this before. I think it's that question of their interpretation of a long-term casual. And I kind of feel like if I knew the employer was dialed into this, I think I've already been set up by this one. Look, they do need to be employed on a regular and systematic basis. So my gut says if they haven't had any work for 6 months, they're probably going to fall short. If they hadn't had any work for a month, would they fall short? I'm not sure, but I'd say 6 months is probably going to fall outside. We really need to wait for the ATO's confirmation because this is a big area that we need their guidance on.
Okay. Do we have to pay work cover on JobKeeper top-up payments?
So there are two things that we haven't heard from. Payroll tax. Now, there's a lot of payroll tax exemptions that we haven't had confirmation from the state governments about whether they're going to include all these extra payments in payroll tax. We also haven't heard from the insurers on work cover. So we can't answer that because they're not talking. I think they're waiting for more ATO guidance to come back to you on that. So sorry.
Okay. I think this is a workplace question, but I'll ask it anyway. If a business is trading and has dropped in income but has stood somebody down and now wants them to come back and work, given that they'll be receiving the wage subsidy, and the employees move to New South Wales to live with the parents and doesn't want to work, are they obliged to still pay the JobKeeper?
In preparation for next week's webinar, this is a question. I work with a few not-for-profits and a few other employers, and it's one of the issues we've had is people refusing to come to work, knowing that they're likely to get this JobKeeper. That is actually going to be an employment law issue for you. Now, remembering that even though we've made some changes to the Fair Work Act, and we'll talk about it more next week, standard employment law applies is in regards to performance, in regards to, so you don't have to keep someone employed if you lawfully release them from your employment. Does that make sense? So if they're not performing or doing what you need, you still have all the powers of an employer to release them, and that means they won't get JobKeeper once they're no longer employed. So we'll talk about that next week.
Okay. Our business has gone through a customer restructure. They decided to exit some customers last year, so their customer base is much smaller. So comparing it to the period last year, obviously they would have a reduction in income. I'm guessing that's going to be one of the commissioner discretion questions.
Well, if they had the income, say, in April last year, they then lost customers in August. So if I compare this April to that April, is that what we're talking about?
Yeah, their customer base has
a natural decline. Yeah, we've had a natural decline. There's no reason that the decline has to be because of COVID-19.
But if they, let's say they cut their customer base and by December they have a certain income, can we compare their income in April to their December income and there's been a 30% reduction?
But if they've lost customers in December, haven't they already?
So they lost customers between April and December, but now we're at our usual customer base. This is our customer base going forward.
Yep.
Can they compare it to December, given that that is their new norm?
I would have thought that they did give us guidance on where there's been an acquisition or there's been cyclical income. So I think that if there's been changes and you'd like the commissioner to consider comparing a different period. So for example, say you were scaling up. So your income last year was quite low and now it's dropped 30% compared to December, but it's still not 30% less than last April.
Yep.
I'd like to hope that that's where we can go and ask the commissioner to consider other factors. He did mention in one of the Treasury papers, it does mention scaling up as being where the alternate test. So if you've been scaling up, so trying to compare now to then, it's really hard because you were really low back then. And now, even though you've sunk compared to the last quarter or the last 6 months, it's still not as low as it was a year ago. they did mention scaling up in the Treasury paper, and I'm hoping that we'll get to go to the Commissioner, or the Commissioner will give us some guidance to say an alternate period, maybe an average or something like that's more appropriate.
Okay, so when we hear that, we'll put something out to clients on that one. We've had a couple questions, so I think maybe just cover it again about if somebody's paid $1,750 a fortnight, can they now cut it back to $1,500? And of course not if they're still working their job.
So the Fair Work Act changes, the things I can tell you about it and not advise you on, because we're not employment lawyers. They did change so that if your business is subject to the JobKeeper payment, they put temporary rules or temporary changes through the Fair Work Act. Those rules allow negotiate or the employers some different powers with regard to changing location, changing hours, and in fact even standing down employees. So there were changes in there that are going to help people who have obviously had a significant drop in income, which is why they're eligible for JobKeeper, to also have a little bit more ability to change their business in the interim and change the way they interact with employees. But we will talk about that in a lot more detail next week and what you can and can't do. The one thing that's very clear though is that where you're on an award or you're paying on an award, you cannot reduce their hourly pay. So changing their hours to reduce it might be possible. Changing their pay and making them work the same is a different story. And it's one of the things that you'd need to agree with the employee for them to be happy to do that.
Yeah. Not sure we can answer this one. It may be a Centrelink question, but I'm part-time. I work part-time and receive a part-time age pension. And am I eligible for JobKeeper? I imagine JobKeeper will affect the
It'll affect your age pension. Yeah.
Age pension.
So JobKeeper is going to come into account in your income test for any Centrelink payments. So are you eligible? Yes. If you meet all the eligibility criteria, you're working part-time, your business is eligible, all those things are met, yes, but you will have to tell Centrelink you're getting JobKeeper, and that will affect other payments.
Yep. We've had a couple of questions again, and you and I have discussed that this week regarding having to pay up front before you start receiving. When you've closed your doors, how do you get that money? And obviously it sounds easy in principle that you can go to your bank and ask for a bit of a loan using the JobKeeper as collateral, but it may not be as easy in principle in reality. So, but yeah, that's what you have to do.
Essentially, you've got to find your own finance, and they did make that a little clearer. You are required to pay it and get it paid, essentially reimbursed by the ATO. What that's going to mean is that you're essentially the first 4 weeks, you will be behind, because the next payment you get from the ATO is probably just going to cover the next payments you make out. And so that first 4 weeks is probably going to be in arrears until the very end when you get that final payment. So you're going to need short-term finance. And when I say short-term, I do mean 6 months.
Yep. Okay, I might be able to answer this one. How do we show JobKeeper in payroll? JobKeeper is actually income to the employer, and payroll is just recorded as normal. So if you have dropped or increased income to that $1,500, you'll put it through your payroll system as a $1,500 a fortnight wage. So it's not like you're putting, I've been asked, is it going to be put in as an allowance? It won't be. It's just part of payroll. So
the only change with that will be if you're getting payments for those eligible business, those owner operators, because that doesn't have to come out. Well, you won't be registered for payroll. They won't be going through single touch payroll. It's a different payment, so that'll be the only difference in accounting for that, and it doesn't have to flow out.
Yep, true.
Yeah.
Just to clarify, somebody wants to clarify, if both the director and a shareholder of the company are both actively involved in the business and they have been listed as full-time employees on the payroll up to date, they're both eligible for JobKeeper.
Yeah, and the only time you can have that business participant, the owner operator, is when they're not on payroll. If you're an employee of your business, then you're eligible under the employee rules. So it's for those people that haven't been treated as an employee that fall under those rules.
Yeah. And we've got a few questions about reducing hours. If people are still operating, can they reduce or adjust the hours to meet so that employees are working for their $1,500 a fortnight? I would say if there's something for them to be doing, otherwise you're paying super. You're paying super for the hours worked. So just sort of calculate that, because you've got to have the cash flow to pay their super. And you don't want them just sitting around in the kitchen just because you wanted them to be there because they're getting paid. So I think that's going to be one of those things, and it was on my question sheet, was can I then make them come in and work? Well, that's an employment law question. That's the sort of thing we're going to go through next week, and that's where that Fair Work Act was changed to allow a greater flexibility. But if they're employed by you, the Fair Work Act now means you can actually give them different duties within reason, and there's a few things around that, different hours, different locations. So we will go through a lot more of those employment law things, particularly how they interact with JobKeeper, and we'll go through those next week. But we'll also go through just general if you're not JobKeeper and you're in this sort of situation. Yeah. So. We do have somebody's just said my MYOB has sent an email saying JobKeeper payments can be set up as a different wage category.
Good, great.
So not quite sure of the point of that, because it'll all go into wages, but I guess to keep track, maybe.
Super.
For the super.
I would imagine they've done it. They've separated it because super won't be on the whole wage. They'll be the top up payments.
So maybe it's the top up.
Yeah.
We'll look at that on a case by case basis, I think. We got a couple of these. What if employees choose not to come to work because they're concerned over the virus? That'll be an employment one next week.
We will go through a lot of those things, and I know a lot of people are really struggling with that, and it's one of the things I've already had pre-conversations with to make sure that we're going to be able to give you that information. So we're looking at doing that in the next week. But as a board member on a not-for-profit or a couple of not-for-profit boards, we're battling with that with employees who are refusing to come to work and saying they're afraid. It still comes back to court employment law. Without a virus, can I just say I'm not turning up? No.
Yeah.
So there's different rules. Whilst the circumstances are a bit different, employment law still sits there. You're not powerless as an employer, put it that way, because there's a pandemic, and we'll talk about that next week.
Okay. We've got quite a lot of questions coming through. How are we going for time? I think we're
actually over time. So I think what we'll do next week is we'll keep going on some frequently asked questions for JobKeeper for probably about 15 minutes of it. And we'll probably spend 45 minutes on employment law and JobKeeper interaction, because it seems like there's a lot sitting there. And I know I had a lot of questions that I've asked of our specialist for the situations that we have. And I think that there's a lot of value for everybody to be able to get that from somebody who's living and breathing that. And I expect in the meantime, this week we're going to be registering people for JobKeeper. The HO is going to provide a lot more guidance, and so we will schedule more time to talk about JobKeeper as well as the employment law for next week. But in the meantime, what we're going to do is, this is recording, which means I'm hoping we've got your questions you're being asked. I've got pre-questions anyway, and as I said, it's going to take me a little bit of time because at the moment I'm looking at 72 participants asking questions in advance, and there's usually more than one question in there. I'm going to try to answer you all personally with what I think. So that's probably going to take me a bit of time. But we want to make sure that you get the answers you need for your circumstances. It's really important to us that you get as much help as you need to get through this. And we'll have the option to ask questions in advance of next week as well. What we're going to be giving you is a one-pager. I think I garbled up that eligible participant bit because I forgot to take out the ABNs and blah, blah, blah. We're going to give you a one-pager that'll probably come out maybe Monday morning that summarises in one page the eligibility criteria. And then we're also going to give you quite a lengthy frequently asked questions, which is some of the ones I've already been through on JobKeeper. we're then going to send you an invitation to next week's webinar. We're also I'm going to try to reply to you personally on your questions, okay? So please, I'm sorry if we didn't get to your question. I know it's confusing. If you need help in your business, please reach out to your Moore Stephens advisor, reach out to me, reach out to Kerry. We're actually here to help you through it, answer these little questions you've got, but we're also offering a bit of a consulting on all of the coronavirus concessions, I'll call them. It's probably not the right thing to call them, but that's what I'm calling them, and how they might work for your business, because you can get bombarded with information on generic stuff available, but there is a lot, and it really does need to be customised for your business. So we're having to talk you through a custom consulting piece, I suppose, as well as if you want us to get on a Zoom meeting with your employees. I've done that for one business, and we had 30 employees on the line, and I explained JobKeeper to them, and they could ask me their personal circumstances questions. We're actually happy if you as an employer want to provide something like that to your staff. We can come along and be the third party, almost runs mediation for you in some ways. But yes, please keep in contact with us, and we will talk to you again next week. Thank you so much for dialing in. If you think that there's somebody else that's not on our client list or not within our network already that could benefit, we aren't closing the invitations to outside parties. We're just not actively advertising it to outside parties. So it goes to our client list because it is something, and our contact list, it is something that we want to provide personalised, assistance to you. But if you've got other businesses, we are more than happy to have them join in with us and listen to what we have to say. So thank you for today, and have a great weekend. And just at the moment, everyone just needs to breathe. Registrations will open on the HO website. We will send you the form to send your employees and a bit of a step-by-step of what you now need to do, okay? And we'll work through with your business circumstances on a one-on-one basis with your advisor. Have a great weekend, and thank you.
Bye.